ever think about those unsung heroes of the global economy? The bits that just keep everything ticking over, protecting people, but maybe don't get the spotlight.
Yeah, the foundational stuff.
Exactly. Today, we're diving deep into one, workers' compensation insurance. It's more than just policy paperwork, right? It's a massive safety net for employees.
Absolutely vital. Covers injuries, illnesses from work, medical costs, lost wages, the works.
But the scale of it, globally, and how fast it's growing, that might...
Global market at, let's see, over $75 billion.
75 billion just for workers' comp in 2021, you said?
Yeah, back in 2021.
Yeah.
And that's just the starting point. Projections show it climbing past $93 billion by 2025.
Wow.
And then an impressive $142 billion by 2033.
Okay, that's huge growth.
It really is. We're looking at a compound annual growth rate, the CAGR, of almost 5.4%. So, yeah, undeniable momentum.
That's a serious trajectory. So our mission today, then, we want to give you the shortcut, cut through the noise, and really understand why this market is expanding so much, region by region. Find those key drivers.
Exactly. Get to those aha moments about this crucial sector.
Okay, let's unpack this. Where do we start? North America seems like the obvious place, given it's the current leader.
Makes sense.
Yeah.
North America isn't just leading, it's really dominating the current landscape.
Okay.
Think about this. Over $43 billion in 2021.
43 billion just for North America.
Just North America.
Yeah.
And it's heading upwards, clearly. Projections are over $52 billion by 2025 and getting close to $79 billion by 2033.
So what's behind that? It's not just the size of the economies, is it?
No, not entirely. It's also about, really established legal frameworks there, high levels of formal employment, mature systems for occupational health and safety, things that have built up over decades.
Right, so there's a kind of embedded demand.
Precisely. That maturity creates consistent baseline demand.
And I guess within North America, the U.S. is the real giant.
Oh, absolutely. The U.S. contribution is overwhelming, really. It makes up the lion's share.
What are the numbers for the U.S. specifically?
Okay, so the U.S. alone, over $37.5 billion in 2021.
Wow, that's most of the North American total right there.
Exactly. And it's projected to hit over $67 billion by 2033. The thing in the U.S. is that complex state-by-state regulation, often mandatory coverage, plus a hugely diverse industrial base.
So different risks, different industries, all needing coverage.
Right. And you also see things like medical inflation and even evolving ideas about what counts as a compensable injury, like mental health claims, pushing that growth. It keeps that CAGR near 5%.
Okay, so the U.S. is massive. What about Canada and Mexico? How do they fit into the picture?
Well, Canada shows really substantial, steady growth. It was over $3.2 billion in 2021, and that's projected to reach $6.6 billion by 2033.
Solid growth there, too. Different system, though, right? Provincial.
Yeah, often public monopolies at the provincial level, which means pretty broad coverage. And Mexico, while smaller, is also climbing steadily, from about $2.6 billion in 2021 to nearly $4.85 billion by 2033.
What's driving Mexico's growth?
A lot of it is the ongoing formalization of their economy. More businesses coming into the formal sector, plus greater adoption of international labor standards.
Yep.
Just a growing recognition that formal worker protection is necessary.
Okay, interesting dynamics in North America. Let's shift focus now. How does Europe compare? Different patterns there versus North America's scale?
Europe's a really significant contributor, though maybe growing a bit more steadily, perhaps.
Okay.
The region was over $12.4 billion in 2021. That's expected to grow to nearly $15 billion by 2025, and then over $21.7 billion by 2033.
Still significant growth, but maybe not quite the same acceleration as North America.
Possibly. And the structure is often different. In many European countries, workers' comp is more integrated into the wider social security system, or you have highly regulated private markets.
Ah, right. So that leads to maybe more stable, predictable growth.
Exactly. Driven by things like an aging workforce, evolving safety norms, and interestingly, a big focus on prevention, which still needs that insurance backstop.
And within Europe, who are the leaders? Which countries stand out?
Germany leads the pack in Europe, valued at over $2.6 billion in 2021, and they're expected to nearly double that to $5 billion by 2033.
Strong German system focused on rehab and prevention, you mentioned.
Yeah, very much so. The UK follows pretty closely, though, rising from over $1.8 billion to about $3.34 billion by 2033.
What's driving the UK market?
It's a mature private insurance market, plus ongoing changes in health and safety rules. Things like new types of claims related to long-term conditions are a factor there.
Got it. Any other key players in Europe?
Definitely. By 2033, you're looking at France and Italy both contributing over $2.5 billion each. Spain's projected over $1.7 billion, Sweden over $1.2 billion.
Okay, so a broad base.
Right. And even, the smaller but still growing markets like Denmark, Switzerland, Luxembourg, the rest of Europe collectively, they add another $2.5 billion plus by 2033. Shows a widespread commitment.
Okay, so Europe is steady, significant growth.
Right.
But if you're looking for, explosive growth, we have to talk Asia-Pacific, right? APAC. Our sources call it fast-growing.
That's putting it mildly. APAC is set for a truly massive leap.
Okay, lay the numbers on us.
It jumps from just over $11.2 billion in 2021 to nearly $25 billion by 2033.
Wow, more than doubling.
Exactly. That gives it the highest regional CAGR of all, almost 6.9%.
So what's fueling that fire? Why such rapid growth?
It's really a combination of factors: rapid industrialization, massive urbanization, a huge shift from informal work to formal employment in many key countries.
So as economies develop and more people work in formal jobs.
The need for mandatory workers' comp just skyrockets. Plus, governments are stepping up, implementing or strengthening labor laws and Social Security to protect these growing workforces.
Makes sense. So who's leading this charge in APAC?
China's out front. Nearly $3 billion back in 2021. Expected to surge past $6.7 billion by 2033. Huge industrial base, massive workforce transitions.
Right.
But India's growth is arguably even more rapid in percentage terms, projected to go from $1.7 billion to nearly $4.2 billion over the same period.
What's driving India specifically?
I think massive infrastructure projects, a booming manufacturing sector, plus just generally increasing awareness of worker rights.
Okay. China and India are huge, obviously. What about other APAC countries?
Well, Japan, South Korea, Australia, Singapore, these are established economies, but they're still showing strong trajectories. They continue to refine and expand their coverage.
And other areas.
Yeah, Southeast Asia as a bloc is significant, expected to contribute over $2.5 billion by 2033, and Taiwan over $1.4 billion. Similar drivers: industrial growth, regulatory development.
It's really clear this growth isn't just, confined to one or two big regions. What about broadening the view? South America, for instance.
Definitely worth looking at. South America is on a solid upward path, too, moving from over $3.7 billion in 2021 to over $7.4 billion projected by 2033.
What are the key drivers there?
Often linked to big industries like mining, agriculture, but also growing manufacturing and service sectors. Brazil's the giant there, obviously.
Right.
Brazil alone is expected to account for nearly $2.82 billion of that 2033 total. Big economy, pretty strong rules for worker protection. But Argentina, Colombia, Peru, Chile, they're all making strong contributions too, as their economies formalize.
Okay, how about the Middle East?
The Middle East shows impressive growth as well. It was over $3.1 billion in 2021, projected to hit nearly $6 billion by 2033. That's a CAGR over 5.6%.
What's pushing that? Big construction projects.
Exactly. Ambitious infrastructure development, especially in the Gulf states, plus a rapidly growing private sector workforce. And as these economies try to diversify beyond oil and gas, they're adopting more international standards for worker safety.
Who leads there?
Saudi Arabia, the UAE, Turkey are leading the growth. But Qatar, Egypt, other Gulf nations are adding steady value too.
And finally, Africa.
Africa is also seeing notable growth, though starting from a smaller base. Expected to grow from about $1.7 billion in 2021 to over $3.3 billion by 2033.
Which countries are the main players?
South Africa and Nigeria are the largest markets currently. South Africa projected over $1.5 billion by 2033, Nigeria around $600 million. Growth drivers are similar: industrialization, more formal labor, construction booms.
And the rest of the continent.
The rest of Africa category is also said to contribute significantly, over $1.2 billion by 2033. It reflects that growing awareness and the beginnings of regulatory development across many nations.
Okay, so we've done a world tour, basically, and the picture is clear. The global workers' compensation insurance market is growing robustly everywhere. It seems propelled by more than just economic growth itself.
That's the key takeaway, I think. It's about deeper shifts.
So what does this all mean for you listening in?
Well, understanding this market's growth really gives you a window into these bigger themes, right?
Wait.
Like the changing nature of the global workforce, the increasing focus globally on worker safety and rights, and of course, the financial tools that actually make these protections work.
So it reflects how economies are trying to protect people.
Exactly. Protecting their most valuable asset,
Yeah.
and how businesses are integrating risk management and, frankly, social responsibility more centrally. It tells you something about how we view worker well-being as part of economic health.
So given all this growth, this sustained expansion everywhere, it makes you wonder what's next.
Mm.
What could the future hold for how we work, for what employers are responsible for the whole idea of safety and compensation as the world gets even more connected? Something to think about, how these big market trends might filter down and impact you or your industry.
Have you ever been, deep in your workday, totally focused, and just had that underlying feeling, that quiet confidence that, hey, if something unexpected happened, you'd actually be covered?
Yeah, that sense of security.
Exactly.
Yeah.
Well, today we're doing a deep dive into the very thing that often underpins that feeling, the workers' compensation insurance market.
A really critical area.
Absolutely. It's vital, isn't it?
Yeah.
Safeguarding employees, but also the businesses themselves. So our mission today is to pull out the key insights, the real nuggets from the sources you shared, especially those findings from cognitive market research. We want to get a handle on this market's dynamics, the challenges, and some of the really interesting innovations happening.
And it's definitely a market on the move.
That's one of the first things that jumps out, right?
Mhm.
Cognitive market research highlights significant growth. So, okay, let's unpack that. What's really pushing this market forward? What are the engines here?
Well, there are several key drivers our sources point to. First off, you've got just the sheer scale of industrial expansion globally.
Yeah.
Think about sectors like construction, manufacturing, logistics. They're growing, they're getting more complex. And with that growth comes naturally increased exposure to occupational hazards.
Right. More activity, more risk.
Precisely. More projects, more goods being moved around. It directly increases the potential for workplace incidents. And that, in turn, fuels the need for comprehensive compensation coverage.
So it's a direct link. Global economic activity and the personal safety net for workers.
Exactly. It shows how interconnected these things are, often in ways we don't consciously think about day to day.
That makes a lot of sense. More building, more stuff moving.
Mm-hmm.
It's a straight line to more risk. What else is adding fuel to this fire?
Another really big factor is government regulation and legal mandates getting stricter.
Ah, the compliance side.
Yes, governments, and this is true in both developed and developing economies, are consistently reinforcing employer liability. They're tightening safety laws.
So workers' comp isn't just a nice perk anymore.
Not at all. It's increasingly a legal must. Take the U.S., for example. Every single state has its own specific workers' compensation laws that employers have to follow.
Every state. Wow.
Yep. And if you don't comply, we're talking potentially steep penalties, significant fines, and real damage to your company's reputation.
Nice.
So that fundamentally shifts it, from being an optional benefit to being a core compliance necessity. For you, the employer listening, it's often not a choice. It's just part of the cost of doing business legally.
Okay, so less about choice, much more about absolute necessity.
Right.
You also mentioned something interesting earlier about a shift in how employers themselves are thinking about it,
Yeah.
beyond just ticking the legal box.
Exactly. That's
Yeah.
a really important trend. Our sources talk about this growing awareness among employers about, employee welfare overall.
Mm-hmm.
We're seeing a definite shift. More companies, and this includes SMEs, small and medium-sized enterprises, they're starting to see workers' comp not just as, a regulatory hurdle they have to jump, but as a genuine strategic tool. Offering good coverage demonstrably helps with employee morale, and it can really impact retention. Keeping good people.
Ah, so it becomes a competitive advantage.
Absolutely. In a tight labor market, it can be a real edge for attracting and holding on to skilled workers. And that dynamic then fuels wider adoption across the market. It's not just about feeling good, it's a smart business move that shows caring for your people can actually help your bottom line.
Okay, so we've got industrial growth, strict regulations, and employers seeing strategic value. That sounds like a lot of momentum,
It is.
but, it's rarely that simple. Our sources also point out some pretty significant hurdles, some real friction in the system. So what are these restraints? What's holding the market back, or at least making things difficult?
Yeah, that's crucial for understanding the full picture. One of the biggest obstacles consistently mentioned is the burden of high operational and claim settlement costs.
Okay, explain that a bit. What goes into those costs?
Well, think about it. You've got issues like fraudulent claims, which insurers have to investigate.
Right, fraud's always a factor.
Then there's the cost of litigation when claims are disputed, legal fees add up fast, and on top of that, you have the background noise of constantly rising healthcare expenses. All of this puts tremendous pressure on the insurer's profit margins.
And how does that pressure play out for businesses, for the ones buying the insurance?
Well, the impact is pretty direct. Those increased costs for the insurer often have to be passed on. That usually means higher premiums for the businesses.
Makes sense.
And this hits smaller businesses particularly hard, especially those operating in really competitive industries or ones with, pretty thin profit margins already. For them, the cost of coverage can become genuinely unaffordable.
That's a tough situation. You need the coverage to protect your people and comply, but the cost itself becomes a barrier.
Exactly. It's a real catch-22 for many small business owners.
And thinking globally again, is this growth and awareness we talked about earlier happening everywhere, or are there gaps?
Oh, definitely gaps. That's another major barrier identified in the research, particularly in emerging economies.
Whereabouts?
We're talking parts of Asia, Africa, Latin America. In many of these regions, there's still a significant lack of awareness about workers' compensation insurance.
Really? They just don't know about it.
Or they might overlook it or just not be fully informed about the specific regulatory requirements in their area, many small businesses especially.
And they're adult.
The result is very low market penetration in those areas. It really restricts the potential for growth, even though the need might be there. It's like trying to sell a vital medicine in a place where people haven't even heard of the disease it treats.
So a huge educational component is missing there. Okay, and what about businesses that do operate across borders, or even just across different states in a large country? You mentioned the U.S. example earlier with state laws. I imagine that creates its own set of problems.
Yeah. Absolutely. That's the third major restraint our sources, like cognitive market research, really emphasize the complex and, frankly, fragmented regulatory environment.
Fragmented how?
Well, for companies operating internationally or even large insurers working across multiple U.S. states or Canadian provinces, the sheer variety in workers' comp laws is staggering.
So it's not just one set of rules.
Not even close. It complicates everything. Standardizing policies, managing claims, ensuring compliance everywhere. It adds significant administrative burdens.
Can you give an example?
Sure. Think about the US or Canada again. Each state or province might have its own completely unique model for calculating premiums. They might have different rules for how claims are settled, different legal frameworks, different reporting requirements.
Wow. Okay.
It's like, imagine driving across the country, but in every state, the traffic laws are totally different. Speed limits, sign meanings, maybe even which side of the road you drive on.
That paints a picture. A logistical nightmare for businesses and insurers trying to operate efficiently across those lines.
It really is. It creates this huge layer of operational complexity and makes it tough for insurers to offer simple, consistent products everywhere they operate.
Okay, so costs, awareness gaps, regulatory mazes, quite a few challenges. But it's not all doom and gloom, is it? The sources also point towards some really promising, almost transformative trends. What's happening on the innovation front? What's reshaping the future here?
Right? Despite the hurdles, there's a lot of exciting development, and technology is, unsurprisingly, a huge part of the story.
Insert tech, right.
Exactly. The adoption of digital platforms and insurtech technology built for the insurance industry is accelerating rapidly. This is probably the most significant trend.
So what does that look like in practice?
We're seeing things like AI being used to process claims much faster and more accurately. Predictive analytics are being used for risk assessment.
So using data to sort of see risks coming.
Precisely. Using historical data and other factors to forecast potential future risks, maybe identify problem areas, and ideally prevent issues before they even happen. We're even seeing blockchain technology being explored for verification, creating super secure and transparent records of transactions.
And the benefit of all this tech?
It streamlines the whole process. From filing a claim to getting it settled, it helps cut down on fraud significantly and generally just makes the experience better for everyone involved, the employee, the employer, the insurer.
Makes it smoother, faster.
Yeah, and more accessible too. Think about mobile apps. They're gaining a lot of traction, especially with, more tech-savvy SMEs. Employees can potentially file claims or manage policy details right from their phones.
That convenience factor is huge.
It is. For you, the business owner listening, it ideally means faster, smoother, more transparent interactions when dealing with workers' comp issues.
Definitely sounds like a game changer for efficiency. So digital transformation is massive. Are there other key trends making waves?
Yes, another important one is the rise of more customized and industry-specific coverage plans.
Moving away from one size fits all.
Exactly. Insurers are increasingly realizing that a construction company faces very different risks than, say, a healthcare provider or a logistics firm.
Makes total sense.
So they're tailoring their products, developing policies that really reflect the unique risk profiles of specific sectors.
And the advantage there.
It leads to more accurate premium calculations, for one. The price better reflects the actual risk. It also means the coverage itself is better suited to the business's real needs. For the insurer, it offers a competitive edge, and ultimately it should lead to happier clients who feel their policy actually understands their business. Precision and relevance are key.
Tailored solutions. Okay. And what about the focus on the worker after an injury? You mentioned costs earlier. Is the approach changing there too?
This is a really interesting and I think positive shift. There's a much stronger focus now on employee rehabilitation and proactive return-to-work programs.
So not just cutting a check.
Right. The thinking is shifting beyond just compensating for the injury monetarily. Insurers are actively investing more and more in initiatives designed to help injured workers recover faster and, crucially, get back into their jobs safely and effectively.
And that helps everyone, presumably.
It really does. From a purely financial standpoint for the insurer, effective rehab and return to work reduces the likelihood of long-term disability claims, which can be incredibly expensive.
Okay.
But beyond that, it helps the employee regain their livelihood and sense of normalcy, and it helps the employer by boosting overall workforce productivity and retaining experienced staff.
That's a broader view.
Yes. As cognitive market research notes, it reflects this wider evolution happening in the market, moving away from just reacting after something bad happens towards a more holistic, proactive approach to managing workplace health and safety before incidents occur and supporting recovery afterwards.
Okay, so let's try and distill this deep dive then. It seems the workers' compensation insurance market is definitely in a period of rapid change. It's being pushed forward by digital tech, by stronger regulations, and by this growing sense that employee well-being is actually smart business.
That sums it up well.
But challenges like those high operational costs and the tangled web of regulations, they definitely still exist. They're real friction points.
They absolutely are.
Yet, the integration of technology and this move towards more tailored, customized solutions seem to be opening up some genuinely exciting opportunities for improvement.
The potential is certainly there.
So, thinking about all this really profound shift we've discussed, moving from just basic compensation toward more proactive health management, combined with the sheer power of technology. What might that mean for the future of workplace safety? Going beyond just the insurance policy itself, could it perhaps start influencing how businesses fundamentally structure their day-to-day operations, or even how they build their employee support systems in the coming years?
Yeah.
Makes you think, doesn't it?